but let's have some fun. So lots going on right now. I mean, hell, we had, the a Silicon Valley bank thing that happened a couple of weeks ago. Really, I say 2 weeks ago. Last Monday, we were worried about the fallout for that. Today, Monday, March the 20th, we are dealing with, UBS took over Credit Suisse. Over the weekend, you had the Bank of England, the Bank of Japan, the Bank of China, the European Central Bank, Singapore National Bank, and the Fed. So for sure, those large banking entities getting together to figure out how to make sure that the financial system as we know it is not about to crumble, which will create more problems. Sure, some opportunity in the market, but it can create more problems too. So might as well start off taking a look at the S&P 500, large index overall, and just get a sense of where we are and where we've been. So I always start off by just zooming out. And I like to zoom out really right here. This is the pandemic. That was a non-market event that ended up having a market event because we, sent so many people home from work. So I really like to start a little less than that, but look at that rally. So let's go ahead and we're just going to make a little visual. I feel like, what's his name? Bob Ross, every now and then, Pretty Little Trees. I don't know if you guys are old enough to remember that, but I saw it in syndication. Look at that rally. I mean, that's sick, right? And then since then, we've got this one has come off, right? Kind of do that a little bit. I don't want to overfit it. There's a term called overfitting when you're doing analysis, and that's when you make it a little too perfect. And so what ends up happening is you create something that shows up well, but you don't end up, but it hides the truth. So we don't want to overfit. I just want, something that gets most of the data inside of there. So we had that. And now, we are kind of at a point where it appears that we are heading a little higher maybe in the S&P, or we're kind of going sideways, depending on how you want to do it. So you go ahead and stretch this on back out. You can look at these. I'm just going from kind of low to high scenario, but you could just as easily try to draw. I do this at the front just to get a good sense of where we are visually. It's like you had this long stretch up, then you have really a period of going lower, and it seems like we've got higher lows, higher highs, and higher lows than we had. So it looks like we may have actually broken this downtrend back towards the end, Q4 of 2022. And we're wanting to go higher, but man, there's so much going on. So I start off really looking at a larger level, a larger amount of data, because I don't want to miss the forest for the trees. So let's go ahead and get rid of this. We're going to analyze some trees going a little deeper. Since we've looked at this now, I'm going to go ahead and give that a little flavor again, stretch it out. Now let's go ahead, like I would normally do, and just go ahead and add some moving averages. I do still value just good old-fashioned, simple moving averages, mostly because, once again, they can help you in your analysis, a quick analysis of the market. And as a background, I traded for a long time. I've traded options for 20-something years. I've traded futures. I've traded physical commodities. And so you have to learn. You end up learning along the way. There's certain things that matter and certain things that don't. And I'll tell you, when it comes to technical analysis, there are plenty of guys that will tell you it doesn't matter. But I am actually not one of them. I do feel like if you at least have an idea of what's going on, technically, there's a really good chance that you'll see the forest and you'll see the trees. A lot of guys get so caught up in just looking at the detail. Like, we can sit here and zoom on the daily and you miss the overall. Now the beauty, I'm using TradingView. The beauty of TradingView, it really allows you to manipulate these charts. And even though I can't fully see or fully discern where my 3 lines, I use the 10-day as my short term, a 20-day as my midterm, and then a 60-day as my longer. It at least gives me the numerical value over here. So I'm going to go ahead and look at this numerically. We've got, let's see, 39.49, 39.74, 39.98, which is, they are all actually in order. The 10-day is above the 20, the 20 is above the 60, which means that from that standpoint, we are actually in a bullish, sorry, what am I saying? It's the opposite. They are in order. Sorry. It is kind of late. They're all in order and they appear to be going lower. So with the 60-day above the 20 and the 20 above the 10, that is a bearish market. Now, we did recently have that 60-day crossover. So like I do in some of the other videos, I want to stretch this out. I want to look at it in different capacities. So first, I'm looking at it. You can see at the monthly level, there's confusion because the 60-day is not, the 60 period is not above the other two, the 20 period and the 10 period. Let's take a look at the weekly. And again, my goal in switching this around is to make sure that I'm not missing the forest for the trees. In this scenario, you've got the 60 above the 10, but the 10 is above the 20. So these are not in order too. Now, we already saw the daily. At the daily level, they are much more in order, showing a bearish behavior. Let's go lower though, 4 hours. So at the 4 hour, I'm just going to go ahead and raise this up so y'all can see it. The 4 hour, that's actually bullish. You see this nice little pattern here. When you zoom in, you've got the green line and the red line. So that would be the 10 period and the 20 period are only a quarter of a point higher than each other. And then both of those are above the 60. Let's take it down to the 1 hour. And I won't go below the 1 hour. The 1 hour, you've got a tapering off. Now let's see. Some of that is, okay, I'm using a chart that is showing after hours trading. So that's part of the reason here. If we were to stop this back at 1500, presumably Central Time, then that would have been where the market closed. So that's good on that. It just kind of gives us an idea of what's going on. So short term, we've got a nice little rally. We saw that rally today on news that the banks are coming in to protect CS, oh my gosh, CS, Credit Suisse. There's several other banks that appear to be in similar scenarios like Deutsche Bank, but seeing this unified effort of the central banks to protect the depositors, right? The people who are part of these banking institutions, that's a good sign for now. It's a good sign unless everything breaks, right? So let's get rid of these. Actually, I'm going to take it back to the daily. We're going to take a quick look at the, I'll pull that back in. We'll take a quick look at the MACD. I like using the moving average conversion divergence indicator, mostly because of all of the stochastic indicators, it's my favorite. It's just the one that I've used the most. You can have another one. There are a bunch of them. This one is the one I like. So let's go ahead and do that, kind of move that around. So you can see here, there was a bearish cross back on the 10th of February. This was, let's see, what was the 10th? of February a while ago. And with that cross, you saw the market go lower. Now, what I end up looking for is for both the red and the blue line to cross the zero line. So the blue line is our MACD line. The red line is a simple moving, or actually I think an exponential moving average. Now they are crossing right here. Now, one of the things that you'll have to understand is all of these indicators have flaws and benefits. So you have to understand the model you're using in order to really get the most out of it. I don't trust these crossovers until they cross the signal line. So you can see back here in October, you had a period where the red and blue line were sort of crossing back and forth. And it did become real here. I would have used another indicator to see that it was becoming real. And then it did cross the signal line, went back lower, but then it really just popped there. And what I'm doing here is I'm comparing the movement of the MACD line and the red and blue line, basically, to make it simple, how that moved and how it affected price. You can also see up here, we were in this oversold area, and then you had a crossover where the MACD line went below the red, and then they both went negative. And really, we had a little pullback, and then it really came on off. So right now you can see, like here, there was a lot of difference, which is why these green bars are so much higher. It's showing you the difference between the two indicators. And here, there isn't much difference. So I really don't see it as being a strong signal, much like back here. We didn't get really a strong signal. Even though, top to bottom, that's a 200-point move in the S&P 500 in a span of about a month. You still have to be careful with this indicator. Let's go ahead. I would normally go ahead and just sort of walk through more of that. I think that's enough of the MACD for now. We don't need to do a big Fibonacci analysis because when it gets down to it, we don't have a whole lot of retracement here, right? Top to bottom here, well, I guess we could do it just for the sake of it. So let's go ahead and top to bottom of that overall trend, we've seen it cross came off. We saw it cross the 50% line. It went lower, crossed that 38.2%. I really don't see the Fibonacci numbers as being that valid right here. But what is more valid is, let's see, I'll show you this. This channel of price is significant. Now, yes, it's a 500-point channel, and you could tighten it up if you really wanted to, but that is, there we go. We'll straighten it up a little bit. That's significant, right? If you are trading options and you're looking at, like some of my students will trade iron butterflies or iron condors, you could also end up selling strangles or something along those lines. Obviously the iron butterflies and iron condors are kind of a mix of straddles and strangles anyway. But when you have a range like this, you really can decide how you're going to price it. Like you can decide to, sell put spreads, sell call spreads up here, assuming that this channel is going to hold. You could even tighten it up. You wouldn't be fully, it wouldn't be horrible to tighten it up even to that. So I tend to use options to make my trading, like to execute on this sort of stuff. I don't like if you said, Eric, do you want to buy or sell the S&P right now? Honestly, my buy price probably wouldn't happen until somewhere above above this. Here, let me make another trend line like the horizontal lines. Somewhere there. Like if we manage to go another, what would that be? Almost 200 points, just shy of 200 points in the S&P. And that's a big move. That would be a huge move, right? Do I need it to go that far before I'm willing to buy? No, I don't have to, but I'm more comfortable seeing a breakout and a continuation of that initial up move that we saw. I also want to make sure that I'm not just playing around at the start of a significant period of sideways movement, right? There's nothing worse also than buying up here only to watch the market come back down and you're like, crap. And so right about the time you're here, you're looking to buy again. You should be buying because you're at the bottom of the channel, but then it turns around and but you're like, oh, the market's going lower this time because the numbers are bad and the Fed's still raising rates or whatever, so we bounce. That's another piece about this week. So not only did we have, about a week and a half ago, we had the Silicon Valley Bank and then the Signature Bank. We had their issues. And then this past weekend, we had Credit Suisse going under and ultimately being bought out by UBS. But we also have an impending possible Fed interest rate movement in another 2 trading days. So on Wednesday afternoon, they'll make that announcement. So it's just a lot going on. You can make the case easily that it's not really that, that this technical analysis really isn't that valid. But the truth of the matter is I like looking at the markets just so I have a better idea of what's going on and what might happen tomorrow. So that's going to be it for this one in particular. Let's check out, you know what? How about we do a little Bitcoin? You guys want to do some Bitcoin? So we're going to come over here. Let me check one thing. All right, we'll keep going. We're going to go ahead and trade some Bitcoin. And just so you guys know, I do have, if you come over here, you've got this income trading 101 channel. The beauty of that, let me make sure it's actually visible. The beauty of that, if you click here on this little button, download our free trading strategy book, you're going to get a book that I made where I literally 74 pages. It's going to ask for your email. And just put your email in there. I'm going to send you this from Charts to Profit. It's a book that I made. I sold it on Kindle a long time ago, a little bit, and I pulled it off of there. Honestly, I was still an energy trader and just didn't have time to deal with Kindle and kind of the whole process of selling that book and not making a whole lot of money. It's like little bits here and there. But if you go ahead and enter your information, your name, your email address, I'm going to send you that book. Like literally it gets emailed straight to you. So it's a great way to get an intro to, to trading, to technical analysis. And it'll help you follow along with me a lot smoother if you do that, because you'll understand how to use these for your own good. This isn't really magic. I wish it was. It's just technical analysis. All right, let's see what's going on here. We'll pull this on. This is Bitcoin. In case you've wondered about this crazy movement, and I have my own crypto story for sure that hurts. So I lived this. Anyway, let me keep on going. So let's just look at some Bitcoin. You guys want to look at Bitcoin? Let's look at Bitcoin. Escape there. Trying to get the right view set up because this is quite interesting. You almost can't even do that. You can do another one there. Look at these slopes. I mean, for these channels. I mean, this is just So interesting, right? But this thing can move significantly. Anyone who trades crypto understands that. The reason why I think this is such an interesting period with crypto is if you were to overlay, in fact, we can do that. We'll overlay this with the S&P 500. The only reason crypto is correlated, right? For the longest time, people thought that, or would argue that crypto is an uncorrelated asset. But the problem is when you have so many people looking at the same asset and they're just looking for either risk on or a little bit of value, right? Then suddenly, especially as institutions and larger buckets of capital that are also in the S&P 500 or in the equity markets, suddenly you end up in a scenario where you've got correlated markets, and a lot of people don't like to look at it that way. We'll just use the SPY, but it's true. Correlated markets. And so let's see if I can get this set up. I mean, they moved so differently over the last few days. That would probably be more accurate to stretch it out this much, because you can see there are periods where let's just do that. I kind of want them overlaid. Sorry about that. I'm trying my best to get this together. You can see they were kind of moving in the same. What I'm looking at is the difference here. I'm going to lay it right on top. You can see how they were moving kind of lockstep. The S&P 500 going up, Bitcoin going up, S&P coming off, Bitcoin coming off. You see that big drop there. Had that in the S&P 500 too. And then you had a scenario in November where Bitcoin really came off, right? And kind of stayed. Then it really ran on up. And the S&P did not get that kind of movement. And then absolutely over the last week, I mean, this is just, you've got relatively flat percentage-wise movements in the S&P 500, and Bitcoin is just doing its thing. I mean, look at this. Since March 11th, right? Today is the 20th, so we're talking 9 days ago. That's only, Bitcoin trades every day, but that's really not that long in terms of trading. It's amazing. And then it pops all the way up. I mean, Bitcoin has just had a phenomenal period. So anyway, let's go back and look at price. I mean, this is from basically 20,000 to 28,000 almost. That's, 40%? It's crazy. It's crazy. So, hold on just a minute. Sorry for the slight distraction. All right, let's get back to some Bitcoin. So I want to treat, so when it comes to technical analysis, if I don't treat everything the same or very similarly, then I won't end up, the things that I see in one chart, I'll either overestimate or underestimate them when I see them in another chart. But if I use the same set of indicators, then I start to get sort of a little bit of wisdom, like the wisdom that comes from experience and just seeing things in different markets using the same analysis. So it's great. So we're going to use a 10-day, 20-day to start off. Let me turn this red. 20-day is my short terms, like my sell bucket. And then a 60, just so we never lose sight of the forest for the trees. Nothing's worse than thinking you're buying into a rally when in fact you're doing nothing more than picking up like the bottom of the bottom rung of an already inflated or even deflated market. So let's see. So right now we see, I mean, obviously with this move that we've seen over the last week, Bitcoin is obviously looking bullish, right? If I tighten this up a bit, though, you can see from whence we came. And so, yes, it's bullish here, but look at where we came from. I mean, it's unreal. Let's flip this around. We'll look at a monthly. Have to tighten this up because it was so big, and have to spread it back out too because it doesn't have the amount of time that we saw with the S&P 500. Here, the monthly is still, let's see. I'm actually looking at the full-on numbers. So the 20-month is actually at 33,000. That's very interesting. Whereas the 10 and the 60 are closer to one another. Definitely not a clear signal. Let's look at the week. So the weekly actually has the 10-day in between still, with the 20 on bottom and the 60 period on top. If we keep pushing higher, that'll change here soon. We already did the 1 day. Let's look at the 4 hour. Have to stretch that out just so we can see it well. Again, it's one of the things I really like about TradingView is it makes it really easy to manipulate this. Like, look at this from the 10th. This thing has just gone crazy. So here it's obviously still bullish. And if I go shorter, even shorter term, 1 hour, 1 hour is actually a little more congested because you've had a period of tightness. So the 20 period is actually above the 10 and the 60 is below them both. So anywho, always nice to start off with a moving average just to get a sense of where are we? It's like, where are we and what should I be aware of, right? Like if I just showed you that, you might say, oh, well, we're nearing a top. But then when you expand it all the way out, even another year, you realize this is a fraction of where Bitcoin has come from. Let's take a look at the MACD. Just because. Why not? So let's go ahead and do this. And there is an indicator I did not use on the S that I want to go back and look at. So we had a nice little crossover here. Doesn't surprise me that we're in this oversold. I would not expect to see a cross happen anytime soon. This is a really strong move for all of the right economic reasons, right? This isn't a bunch of crypto bros deciding they want Bitcoin. This is the world saying, hey, we are questioning centralized, not centralized finance. We are questioning the central banks in the system. And instead of keeping our money in these central banks or these large government-backed banks, let's put it in Bitcoin. That's the story that's happening over the last week. You had 2 banks close here. You had another bank close this weekend. So we could see a period of it slowing down. If there's more confidence in the market, people might actually go ahead and be comfortable putting money in the stock market versus Bitcoin. But if the volatility continues, expect to see more Bitcoin trades. Let's put the VIX, which would be a volatility index. Let's see, where do I find the VIX? There you go. A little volatility index. Let's put that on top of Bitcoin. I've actually never looked at this one. This represents the volatility in the overall equity markets, right, relative to price movement in Bitcoin. That's interesting. You can see here recently, try and connect that, this rally, how that rallied, and price came, or that fear, volatility started coming off, but it easily could have blown up this past weekend had Credit Suisse gone under. I'm not sure about buying. I'm a long-term holder of Bitcoin. I do understand. I mean, this is a volatile asset. You can see right now we actually in Bitcoin have come up to the previous support, which is going to be like right there. So our pricing is bouncing right up against that previous support that we saw back here in May of 22. If we can break out of this period, if we can get from where we are now, say up another 10%, then it might be off to the races for Bitcoin, which would be very nice. I would be very happy seeing the crypto world really kind of bounce. 'Cause I want crypto winter to be over, but and anyone who's in crypto gets it. But yeah, so let's keep going. Not really time for a Fibonacci retracement, although I guess we could do one. Let's do one. You guys are watching, so let's do one. So we're going to take it from the top here all the way to the bottom there. And I like to just drag it over to give myself a good idea of where we are. So in Fibonacci terms, we're barely even triggering this first. Here, let's do that. Pull this down. We're barely triggering the first Fibonacci number, the 23.6% retracement. It'd be great to see us hit this 38.2, which would be 36,000 points in Bitcoin, $36,000 rather, not points. So we are still quite a ways off from that, but you know, crazier things have happened, and that would make me very happy. I'd be really happy if Bitcoin wanted to retest that high up there, but I'm not going to hold my breath because no one's here to call 911 on my behalf, and I might be holding for a bit. Let's do, next up, let's take a look at crude oil. I'm just all over the place right now. I hope you guys are up for this. First off, I wasn't even sure if these, I wasn't even sure if, you know what, I'm going to look at the USO instead because that's something that you guys can trade. And what it ends up doing, the USO actually smooths out, more or less smooths out those, let's see, fund, ETF. There you go. It smooths out the futures. So there's always a rolling effect. And that rolling effect moving from, say, February to March futures, March to April, that gets smoothed out in these ETFs. There is a fee. You pay some fees in that, but it's actually built into the fund. And you'll see this really does end up moving a lot more like the S&P 500. In fact, we might as well go ahead and start there, overlay the what do you call it? The S&P 500 ETF here. And let's see. Trying to see what the right view would be for you to kind of get a better sense of that. Let's see. Ooh, that's a better one. I like seeing, I try to match it to where you can see, you know, like these periods where you see them moving in order, going back up, coming back down kind of together a little bit. Crude oil also can end up being a global asset, risk on or risk off. So when people feel like it's a period of risk, high risk, and they want that, they might be able to get better returns trading crude because it's a commodity, a volatile one at that, rather than just putting it in like the S&P 500, the overall market. So just keep stretching that. Why not? Let's see what it takes to break it. Let's break it. Anyway, it's what I'm looking at when I lay these on top of each other. It's just periods of similar movement, similar moving patterns, and where they break. So right now, you see how much crude oil has come off in the last week. And even with the S&P 500 being down, I mean, crude oil has really fallen quite a bit for this ETF to have done this. This is a significant move. You might be happy at the gas tank, but you know there are implications with the overall economy, with commodity prices, food and energy. Ironically, the two things that were taken out of the CPI index. But that's a whole nother conversation for another day. So I don't know if you have any economists in the room, but it's worth having a framework to understand what all of this means and how all of these factors play together or don't play well together. So you can see crude has been kind of slightly on a downward trend since last summer. And we really have gone below in the last few days. So we'll see how that all plays out. But let's go ahead, like we did with the others. Let's see, what do we got here? Let's go ahead and add some moving averages and just start there. And then I'll go back across all three and add one more indicator that's not in the book, but that I really think is very valuable. So we'll go ahead and add, like we did with the last one. We're going to do a 10-day. Swing that bad boy green. And for those who, some of you might be annoyed watching me do this individually, the reason I do it individually is just so people can follow along with me if they decide to do it themselves. One of the beauties of TradeStation is you actually can program this, not TradeStation, it's TradingView. TradingView allows you to program a lot of this. So you can create a series of analysis, right? A set of tools that you always are able to use whenever you want. So look at that. You've got some, look at that headline, WTI crude oil closes higher, even as the banking crisis heightens recession worries, right? Energy stocks, so oil drops to a 16-month low. So there's all sorts of conflicting news going on right now with daily crude oil. You can see, and this is once again the USO. This is an ETF. This is essentially a derivative of crude oil, as are the futures, but this will smooth out the change from month to month. So that's all I wanted. I could have used the front month crude as well, but I'm happy here. Because this is the instrument that most of you guys will use if you decide to actually trade crude, unless you're comfortable trading futures, which I do. There's actually a mini crude oil future now, so you can trade the big boy, or you could. The big boy is worth 1,000. It's the equivalent of 1,000 barrels of crude oil, or you could trade the smaller contract, which is, much more palatable for most of your accounts, and you're not going to hold it. You don't have to hold it overnight. You can trade it intraday, and the margin requirements are very manageable. So here you can see we've got the 60-day above the 20, above the 10, which is full on bearish. But given this move here, I mean, over the last week or so, it's inevitable that that's going to be bearish. If we go bigger, kind of curious. Let's see how this looks. So out here, interesting. You have a scenario where the 10-day is above. The 10 period is above the 20, but the 60 is in the middle. So I just call that a bit of a period of convergence. So there really isn't anything. There's no data or good analysis to be had from using that moving average right there. What is interesting, though, is look at that move, this rise up 2020 until essentially summer of 22 was just a straight move up in crude oil. And now we're seeing this decline. It's hard to see that decline sometimes until you take it to a larger time frame. So that, again, is why I like looking at the monthly and the weeklies. Let's go ahead and pull this out a little bit. So here on the weekly, because of the this recent drop, you have a scenario where the 10 period is below the 20, and that's below the 60. So that is a bearish signal at the weekly, just like we have on the daily. So good to know. I'm just going to look at the 4-hour as well. Yep, 4-hour is still going to be bearish as well. So all right, let's swing this back to the daily. We'll look at the MACD line. And then we will decide on a couple things. So let's go ahead and do this, tighten this up. There we go. I at least want to see that last top as I'm doing this. We're going to use a little MACD. MACD, Seems like it needs to be like a rap song or something, which would be kind of cool. Maybe that'll be my next project. Or not. You guys don't want to hear me rap. This is not as helpful. Okay, so check this out. You had a crossover between the MACD and the signal line here, and it's just sort of hovered around the 0 line. And as I look at this, I mean, I just see that to me as a channel. Look at that, a $7 channel in the ETF that we just broke out of, went below. So this MACD movement isn't as valuable as you would want. This doesn't help me as much as I would like, especially these periods where there isn't that much difference. They're sort of hanging right around the 0 line. As far as the 0 line tells you the difference, like these green bars and these red bars tell you the difference between the blue and the red line, right? If you don't understand that, once again, go over to Income Trading 101 and just request that book. It'll get emailed right to you. So we send it to you by email, and I'll probably do a trading webinar here soon on technical analysis, and possibly even talk about what I do in the options world to be able to capture some profits here. But that's for another channel. I don't know if you guys know, I've mentioned it on some of my videos, or some of the videos a while ago, but I actually have had a weekly podcast called The Weekly Option. It is an option trading podcast. You can Google that phrase, option trading podcast, and you'll find me. You'll find that podcast. And it's been going for 5 years, every week. So it's been great. But you'll get to hear how I trade. I give 3 trade ideas every week, right? 3 new trade ideas. And then in the next show, I review how those trade ideas responded to the markets that week. So it's a lot of fun for me. I get great email as well from the people who listen. I love helping people. So it's a lot of fun. And part of what drove me away from this channel, to be fair, and I mentioned it on a couple of videos ago, is that I kind of had a little hiccup with YouTube with regards to getting I got reprimanded in a scenario where I should not have, and they owned up to it and kind of did the right thing. So appreciate that. But anyway, back to this. This doesn't help me as much. Like even this, downward cross down here, but only the blue line, not the signal line, only the MACD line went above the 0 line. So, it's hard to trade using this in these scenarios. But that's part of the beauty, is you just want to make sure you find something that works. But that being said, let's check one more thing. And because I promised, and I'll wrap this video up, let's go ahead. We're going to tighten this up a little bit. One of the things that I've started using is volume, the volume profile, visible range volume profile, to get a better sense of support and resistance, right? Like what I like here, you can see like where we are now. Oh, look at how that changed. Well, let's pull it on out. Let's get a better sense of our true support and resistance here. So highest volume here, but you've also got strong volume right around where we are too, which would mean that up here, this is actually, let's go ahead and, there we go. This is, you can see how this was support. That was support, resistance here, support here. Look at that. Resistance, and boom. So we're not around any support or resistance up here, but you definitely have resistance in this ETF sitting right there at about 69.73 or so. That's huge. That's really valuable to know. Let's go back and look at the Bitcoin. So we did not use this indicator for Bitcoin. So look at there. No surprise there. Look how long we traded right around this area. So that's where all the volume was. So we are not around currently any strong support or resistance. I'm going to tighten this up so we can see what might be above. Oh, interesting. That 38,000 level kind of played a little bit of support back here in, in whether that be September of 21, and we hovered right around it, kind of sat on it in March of 22, February 22, Q1 of 22. But yeah, this is very interesting, right? I love this this indicator. I'm just getting into using it. Definitely will be teaching it some as well if we go ahead and once I get beyond. Oh, interesting. Let's go stock. We'll be teaching that once we for anyone that ends up wanting to see kind of learn a little bit more about it in the webinar when I have the webinar. So finally, just going back to the S&P 500, we are actually right around, you can see currently, we are right around this period of volume, high period of volume. So this period actually acted as support. We're bumping up against it right now. Support often becomes resistance once you go through it. It was resistance back here in June of last summer. It acted as, we didn't even get there in November, but then it became support. Anyway, lots going on here. Thank you guys so much. I'm going to wrap up. I don't want this video to be too long. I really just wanted to do a little bit of live streaming and make sure that technically it all worked. And we'll definitely do some more soon. So thank you for watching. Take care.